Hello, and welcome back to this week's edition of the Vancouver Mid-Island Real Estate Market Update. This report is for the week of April 12th for the areas of Crofton, Chemainus, Saltaire, and Ladysmith. Wow, what a week. I have a lot to tell you about, summarized at the end of this broadcast to try to explain to you why this is happening. So I'll explain to you now what has happened in this last week, and then we'll go on to why it's happening. Okay, so we have 17 new listings in this small market area over the last 7 days, listing from a condo, $174,000 right up to a $1.4 million waterfront in Ladysmith in a gated community. We have 13 new sales, starting with a $405,000 townhouse in Chemainus, right up to $2.2 million waterfront. We had 2 price decreases this week. If we look next here, you can see all of these stats here, and 1 price increase. And 7 new solds down here. Those are the properties that actually changed hands. So that's a heck of a lot of market activity. You're always welcome to phone me and talk to me about more detail about those. So let's get into the nitty gritty, why this is happening. So I've got a lot of notes that I've summarized for you this week from various places, but a lot of it's Michael Campbell's Money Talks, who is my go-to, always has been for decades. Anyway, so here we go. We should always start in our lives and our financial lives with the big picture, the macroeconomic picture, and drill down. That will give us the understanding as to why this came at us, why we're here now, and where it's going, which is very, very important information for all of us. Okay, so be aware more taxers are coming at us. They have to pay for this somehow, and we are the ones who are going to be paying for it. So there'll be increase in corporate taxes as well, small businesses, large businesses. Doesn't matter. We're all going to get taxed more. Seeing a huge outflow of capital and jobs to China is partially a cause of this. Businesses may start relocating to China because of all these taxes that are going to be coming at us. Inflation is no longer a boring topic. People have talked about it for years. I've been hearing about hyperinflation for years. I think it's finally coming at us. I know that you on your daily basis have recognized skyrocketing prices, yet government, because of their policies, are severely underreporting it at 1.5%. We all know that's a lie. Gas, real estate, cars are up 7%, pickups up 20%, groceries, commodities, like all building materials, lumber, plywood, cement, all of it tripling and just skyrocketing. Inflation hits lower income brackets worse. So unfortunately, it's that, the less well off you are, the harder this is going to hit you, which seems like a very unfair thing in the system. So I sure hope you're listening so that you can prepare and guard yourself. Reliance on Asian manufacturing is a partial cause because it's right now causing all kinds of supply shortages. It's the old supply demand curve. If there's a shortage, the prices are going to be higher. Big inflation story that we've been told, we're being lied to by the government. I don't know why. I don't know why they're not truthful. Vehicles are in low supply because their raw materials make them so. A lot of those raw materials come from overseas. There are a big shipping crisis going on right now. There are products backed up on docks. There are shipping containers that are 10 times more expensive than they were before this started. GM is actually shutting down several of their plants because of lack of input to build these vehicles. Car lots have very few vehicles on them. That's why their prices are also skyrocketing. Near-term inflation will be short-lived. It's caused by geopolitical factors as well. The U.S. continues on their serial. It's now become serial quantitative easing, QE. They're just printing and printing money. That's their solution right now. The next 2 years until the U.S. midterms, this is expected to continue to happen. The dollars are being created out of thin air. They're just adding another zero digitally, and away we go. And of course, there's going to be consequences that we'll all be paying for in the future on this. The Biden administration in the last short time, they've put up things 1.9 trillion, then 5.2 trillion, then 3.5 trillion. And we are in the first global sovereign debt bubble, is what they're saying. So, be wary. Default or restructuring the debt or hyperinflation or hyperinflate the debt away are 3 solutions for them to get out of it. The U.S. the experts believe it's being worked on now, is that how the U.S. will get out of this, and we're all involved in this, of course. The U.S. will slowly and quietly default on their obligations. If you're a bondholder, get out. You do not want to own bonds right now. They are worthless because of all of this that's going on. With the last two or more years, government spending has been spreading gobs of money everywhere, gobs and gobs of money everywhere, with little criticism from anybody because of COVID. Tremendous lack of employment. I'm sure you've seen around here, employees wanted. No one can get employees right now. There's an incredible lack of industrial space because grow-ops have gone in and taken over our industrial space, which is making it very, very hard for our small businesses that are creating things to be in our communities and find a place to go. The agricultural land reserve is severely out of whack. It was blanketed decades ago, and a lot of it makes no sense because it's on land that is not even remotely arable. However, those grow-ops that are now in industrial parks could be relocated to those ALR lands that are not arable because grow-ops are grown in buildings hydroponically. The government's not even looking at this, unfortunately, and it's causing us all a lot of grief. How to protect yourself? Good question. We've got a fiat currency debasement going on. Our money will be worth nothing, very little. So gold, tech stocks, real estates are a good way to protect yourself by owning them. Don't own bonds. That's another way to protect yourself. Inflate away your debt. I don't know how you do that, but the government seems to be going to do it. So I don't know, maybe we need to figure out how that works on an individual basis. Invest in asset classes for infrastructure. Our biggest worry right now and risk is how the process is managed politically. It's a very geopolitically sensitive time. Quietly and slowly, governments will default on their obligations. If they manage that well, it could have a happy ending. China capital flows into them because their interest rates are better, so it's attracting money, and they don't have the same amount of debt, and their GDP is growing a lot faster than ours. We've allowed it to evolve. We've allowed it. Yet cutting them off will destroy our own economies. So it's a real catch-22. We've known this for decades, but corporations have been allowed to export our jobs, our resources, everything else, and now we're paying the price dearly. Government will increase the stress test on your borrowing. If you're buying right now, be wary of this, please. After June 1st, and so there may be a very big rush between now and May, but they'll have a proposal by the end of this week as to what they're going to do to that stress test, but they may change the B2 stress test to a B4 stress test. So in other words, you'll have to qualify at 4% higher than you're qualified for, whereas right now it's 2% higher, which was something they brought in 2 years ago. It's preposterous because they need to be increasing supply, not punishing the public. And who needs to protect the banks? They don't need any more protection. They've got plenty of protection. You may have to requalify because of this. So please get in touch with your mortgage brokers or banks if you have already qualified, because that could well change as of Friday or whenever they implement this new whatever they're going to do. Real estate markets are up nationally between 17 and 20%. If you are a homeowner, it's a really good thing. This is a good thing. Your equity is climbing and you're getting wealthy just sitting in your home. So there's a lot of good in it that way, if you know how to manage that and are wise with it. It's a very tumultuous time. Modern monetary theory, MMT, says that we are encouraged to spend now because our money will be worth less tomorrow. So people are running in and rushing in and spending. Another thing that's causing shortages. If you need a store, place your money in real estate. As we said, this is how you can mitigate your risk. Own that real estate. Own gold stocks, own tech stocks, asset stocks, infrastructure asset stocks. The Biden administration money supply, they are increasing the money supply, which equals a buoyant stock market and a buoyant real estate market. So that's what's going on. It's pretty darn complex, but you can't answer that question any less easily than that if you really want to understand why these prices are going crazy like they are in real estate. And so scratch your head no longer. That's the macro picture. So we started with the macro picture and we drilled down to the micro, which is you and I and our real estate and our tiny little lives and all of this. So that's your report for this week. Thank you so much for listening. I'm Debbie Simmonds, eXp Realty, 250-246-0708. Call me anytime with all of your real estate needs. Professional, caring, kind.